goal of investing for most people, myself included, is to one day live off of that investment pot. In this video, we're going to talk about how you can actually realistically one day live off your investments and what it's going to take to get from this point today up until that point later in life.
Oh my God, okay, it's happening. Everybody.
I actually originally received this question via Twitter, where someone asked me a question along the lines of, how are you going to live off your investments? Are you going to withdraw the profits? Can you also explain the 4% safe withdrawal rate rule? And in this video, we're going to cover all of that and more, so stick around till the end. And if you do have any questions at all, feel free to leave them in the comments or tweet me, DM me on Instagram, and I may also make them into a video at some point. So let's talk about the 4% safe withdrawal rate. This essentially says that once you build your investment pot up to a certain level, you can draw down 4% from that pot and live off of that pot forever. For example, if you had £1 million invested, you could draw down 4% per year, which is £40,000. You could use that to live without actually touching any of the investment principal, and that is because the stock market on average grows 7 to 8% per year. So you can draw down 4% while still getting 3 to 4% growth over time. Now, the way to actually work this out is if you can try and forecast what your annual expenses will be, times that by 25, and that gives you how much you need to build your investment pot up to then live off of it almost indefinitely.
2 + 2 is 4, -1, that's 3, quick maths.
For example, if you know you need £25,000 worth of expenses per year to live off in retirement, you then need an investment pot by the time you get to retirement age of 625 grand. You can then withdraw 4% per year, which is £25,000, and live off that money forever without touching the principal, whilst hopefully getting a little bit of growth each year in a range of 3 to 4%.
That's nice.
And that is because the stock market averages 7 to 8% over the long term. That all sounds great in theory, however there are some drawbacks. First of all, this is mainly theoretical. The stock market very rarely actually grows 7 to 8% in an individual year. If you look at the last previous decades and decades, very rarely does the stock market actually achieve in that 7 to 8% range. It's normally much higher or much lower. It might be +15, +20, -2, -25. It's very unpredictable, and the market's returns in the short term are volatile. Although it does average to 7 to 8%, it's very unlikely it will work like that in practice when it comes to retiring and drawing down from your investments. Another thing to mention here, another drawback, is that generally speaking, people are thinking the 4% rule could be a little bit dead just because high inflation is here and it may continue, and stock market returns, because they've been so strong over the last few decades, are expected to be weaker over the coming decades. So that may mean that the 4% rule may become the 3% rule or the 2% rule. Of course, like anything, it's good to flex it and run some sensitivity analysis to see what's the most and minimum you could live off of. But it's worth saying the 4% rule, by the time we get to retirement, me saying 20 or 30 years, it may be a much lower percentage than that. And of course, the lower percentage, the bigger pot we need to build up. Now that we've been through that, let's get into my own personal approach of how I plan to live off of my investments. So the two main things I think you need to think about is your actual income and where you're going to get it from. For example, do you just solely want to live off of your stock market portfolio, or do you have rental properties? Will you get a part-time job? Will you have passive income streams from YouTube or from selling books or something else? The second thing to consider is, of course, then your expenses and how much your expenses actually plan to be whilst you want to live off of your investment pot. And combining these two things together will essentially work out how you can realistically live off your investments one day, including how much you actually need and in what age you can do it. Of course, the lower your income and the higher your expenses will be, then the bigger the pot you need to build up. If you want to live a more luxurious lifestyle, once you start living off of your investments, once again, you're going to need a larger investment pot to start with. For me personally though, I'm relatively frugal. So I'd probably actually rather live off my investments earlier, say when I'm 45, on a lower investment pot and have lower expenses, than working an extra 10 years to when I'm 55 and having a higher investment pot and then higher expenses, if that makes sense.
What a stupid question that is.
But now let's go on to something maybe a bit more realistic and my personal approach on how I plan to retire one day using my investments. The question I quoted at the start from Twitter asked, how am I going to live off of the profits? That is partly how I'm going to do it, but also the dividends. I currently use accumulation index funds, which means all the dividends are automatically reinvested. But when I get to retirement, I'm going to switch from accumulation funds to income funds. That means rather than those dividends being reinvested, I'll then start getting the dividends as cash. And of course, in my actual pot, just say my pot is £1 million, by the time I get to the time I lift off of my investments, let's say it's £1 million, that will of course be an accumulation of all of my contributions, my gains, and my dividends reinvested over the next 10, 20, 30 years. So that will already be an accumulation of that. So I can then switch that £1 million pot, which includes all of that, into an income fund and start living off the dividends. So if that is a 2% dividend yield an index fund gives me, that'll be £20,000 per year that I can take. So in this example, whilst also taking those dividends, which at 2% is fairly realistic, I think, for a dividend yield, depending on what fund I'm using, I will also try and live off of some of the gains from my investment pot. I would hope to take roughly about 2% from the investment pot, whilst having 2% from the dividends to give me that 4% that I can then live off of. But I may be getting a bit ahead of myself here, so going back quickly, we need to first think about, as we talked about at the start, expenses. Expenses are the most important thing, because depending on how large your expenses are, depends on how much income you need from your different investment pots. I'm relatively frugal, not massively, just relatively, so I could probably live on a bit less money if I needed to, which is what I think potentially I'd be able to retire a bit earlier whilst withdrawing a lower percentage from my investment pot per year, and then also utilising the dividends that I talked about to combine the two, the withdrawal and the dividends, to hopefully cover my annual expenses at the time, whatever they are, to live off of my investments that way. It is worth saying though that I personally will keep myself invested. A lot of people may switch to bonds or to cash, but really switching to bonds and cash, especially in today's environment, is one way to destroy your wealth, because inflation is high, interest rates are getting higher, so bonds and cash don't perform well. I personally think even in retirement, I would keep at least 75% of my money in stocks. As always, stocks being global index funds, live off the dividends from that, whilst also, as I mentioned, living off my investment pot that I've accumulated over the last 10, 20, 30 years, whatever it is, whatever age I get to at retirement. I'm going to be very invested in the market, so I would probably keep a 2-year emergency fund just in case there is a big recession and I need cash to ride it out. So an emergency fund would be the first thing that I would do, and mine's currently about 6 months, but I would get a 1 to 2 year emergency fund to ride out any downs in the investment markets. The second side to this, and this is a bit more theoretical as I currently have no properties at all, I hope in 20 years time I would have my own house and a few investment properties. I could then rent those out and live off of the rental income from those properties. Who knows how I'm going to get there, this is just a pipe dream at the moment, but that is the plan. I'm going to have that emergency fund, so I'll be fine if the markets do perform poorly in any given year. I will then have my stock market, global index funds, my property buy-to-lets. I will probably just stick to buy-to-lets because I generally favour the simple approaches, the tried and tested methods. Once I've got that emergency fund and that income set, I will then work out my expenses, because expenses is arguably the driving factor. I'm relatively frugal, as I mentioned, but your expenses are the most important factor, because the more frugal you are, then the earlier you can live off of your pot, or the less you need in your pot. And even though I said the 4% rule may be dead or people are doubting it, I think it is still quite a good rule of thumb to follow. Even if you use 3% or 2%, following a rough rule of thumb can actually visualize how much you need to have invested to then achieve financial freedom, which is, as I mentioned at the start of the video, is the goal for many people and why we actually invest. But that wraps up how I plan to live off of my investments. I hope that has helped. We've covered the 4% safe withdrawal rate and some limitations of it. I've then gone through my own personal approach of having an emergency fund, having a multi-stock market and property portfolio, and then finally working out those expenses and seeing how much I can actually afford to live off of per year. I think an important thing to mention is though, I will definitely stay invested, as I mentioned, in both stock markets through global index funds and hopefully one day property market, because I still want to generate growth over time. Even though the market may crash, it may boom, who knows, that's out of my control. I will stay invested and still aim to grow my wealth slowly over time while drawing down on some of the investment income streams. I hope that's all made sense. Let me know how you plan to live off your investments one day in the comments below, and I'll see you in the next video.